Good afternoon, everyone. My name is Charles Rather, managing partner here at Amlaw Group. Wanted to talk about income levels with regional center projects today because a lot of people think that if a project pays a higher income rate, that means the project is necessarily riskier. I don't agree with that assessment at all. A lot depends on the individual factors and features of that particular project. Sometimes the developer or the regional center just want to take more money for themselves, and therefore they're offering a smaller interest rate to the investors. Sometimes, the regional center or developer are willing to share more liberally, let's say that, more, they're willing to be more equitable with the EB5 investors and share with them a larger amount of the income. One thing you should probably know is that the income that's being promised to the EB5 investors is not the real income of the project. The average income rate, I would say, on EB5 regional center projects these days in 2024 is maybe 0.5%, maybe 1% per annum. That's kind of the rate that some of the more established larger regional centers are paying. But believe me, that's a tiny fraction of the amount of money that the developer and even the regional center are making on the deal. Therefore, that factor alone, the level of income that the developer or the regional center want to keep for themselves, that can affect significantly the amount of income that is being offered to the investors. So I wouldn't be too worried about a project that's offering 3% as opposed to 1%. Yes, nominally that's 3 times higher interest rate, but when you look at the capital structure of these deals, there's not a whole lot of difference between 1% and 3% in terms of the financial viability. And I think in most cases, the difference in those situations is more a result of, I don't want to say greediness, but the amount of money that the developer and regional center want to keep for themselves and how much they're willing to share. Of course, in any case, you need to study and evaluate each particular project because each one is separate. And generally speaking, yes, you might be in a more I wouldn't say vulnerable space when you're offered 5 or 6% as opposed to 0.5. But I can't say that if you're getting 0.5% and another project is offering 5%, that your investment is 10 times safer with the 0.5. Not at all. That is not at all a fair statement. That's why I think it's very important. If you're looking at projects, you need to evaluate each particular project with your attorney and on your own as well to see where in the capital stack the EB5 investors are, what class of investors or lenders have priority over you, and use that to make an evaluation. And sometimes you'll see that it doesn't always add up, that the projects that are paying less interest, they're really maybe not that much safer than the ones that are paying more. So if this was helpful to you, we're happy to reply to any questions or comments you might have in the commentary. Also grateful for any likes that you might make for this video, or even better yet, subscribe to our channel so you can stay on top of all new issues regarding EB5 and other business immigration issues in America.